Hey everyone, welcome back to Corporate Decoder. Today we're diving into International Seaways Inc.'s latest report, and let's just say they've been busy swimming in some interesting financial waters. Before we dive in, if you love getting clear insights from complex corporate documents like this, make sure you're subscribed. And hey, we have a fantastic community over on Discord, linked in the description below, where we break down these filings even further. So International Seaways Inc. dropped this report on the 26th of September of 2025, but the main event we're looking at happened a few days earlier on the 23rd of September. They've entered into a pretty significant deal here, basically taking on a hefty chunk of debt to make some big moves. On that, the 23rd of September date, the company International Seaways Incorporated issued bonds worth a cool $250 million. These are called 7.125% senior unsecured bonds that are due in 2030. And get this, they were issued at their full price, meaning at 100%. Now, what does this mean for you and me? Well, these bonds are essentially a loan to the company. They'll be paying 7.125% interest each year. This interest will be paid out twice a year, on the 23rd of March and the 23rd of September, starting in March of 2026. These are considered senior unsecured obligations, which means if the company ever gets into serious financial trouble, the people who hold these bonds are pretty high up on the list to get their money back, but not as high as those with secured loans. They've also made plans to list these bonds on the Oslo Stock Exchange, which is interesting. This deal isn't just about borrowing money, it comes with some strings attached. The company has agreed to certain promises and restrictions. For instance, they need to keep a certain amount of readily available cash, the greater of $50 million or 5% of their total debt. They also need to make sure their borrowings aren't too much compared to their overall financial structure, keeping that net debt to total capitalization ratio below 0.65 to 1.00 plus. They need to make sure their short-term assets are more than their short-term liabilities, with a special condition excluding debt due within a year. And naturally, there are limits on how much money they can pay out in dividends or distributions, requiring them to have enough free cash for that. There are also restrictions on things like mergers or selling off major assets. Now, for some interesting protection clauses, if something big happens, like a change in control of the company, or if their stock gets delisted, they might have to buy back these bonds early, and they'd have to buy them back at a slightly higher price, 101% of the original amount, plus any interest that's already owed. The company also has the option to redeem these bonds early. They can do this if new laws force them to pay extra taxes on interest payments. Also, before March 2028, they can redeem all or part of the bonds early, paying a make-whole premium along with any accrued interest. After March 2028, they can still redeem them early, but the premium decreases over time, eventually going down to 100% of the principal amount by March 2030. So, what are they doing with this $250 million? A big chunk of it is going towards buying back 6 oil tankers. These are called VLCCs, very large crude carriers. They had a lease financing arrangement for these and seem to be exercising their option to purchase them, with an announcement of their intention to do so in November of 2025. The rest of the money will be used for general company stuff. This shows a shift towards owning more assets rather than leasing. The sale of these bonds was done carefully. They were offered outside the United States under rules that allow for this, and within the United States, they were only sold to specific institutional investors who are considered qualified by the Securities Act, using an exemption from registration. This tells us they were targeting sophisticated investors for this debt offering. This next part is pretty straightforward. It's just acknowledging that the deal we just discussed, the bond issuance, creates a direct financial obligation for the company. It's essentially confirming that they've taken on this new debt. Now let's talk about what all this means. International Seaways Incorporated is making a pretty clear statement with this move. They're reborrowing a significant amount of money not to fund daily operations, but to actually buy physical Accession large oil tankers. This suggests they are confident in the future of the shipping market and want to increase their ownership stake in their fleet. This could lead to higher long-term revenues if shipping rates stay strong, but it also means they carry more risk if the market turns south. The interest rate of 7.125% is not insignificant. It's a cost of doing business they'll have to manage. The covenants are standard for such an issuance, indicating they intend to maintain financial discipline. The put options, triggered by things like a change of control, offer some protection to the bondholders, which is typical in debt markets. The strategy here appears to be a move towards greater asset ownership, potentially to capture more upside in a favorable market environment. However, by taking on this debt, they are also increasing their financial leverage, meaning their profits could be amplified in good times, but their losses could be magnified in bad times. They are betting on stability and growth in their sector. In my opinion, International Seaways Incorporated is showing a bold commitment to expanding its own fleet. This is a strategic decision that could pay off handsomely if the shipping industry continues its upward trend. However, the increased debt load means they are more vulnerable to market downturns. Investors will want to keep a close eye on shipping rates and the company's ability to manage its debt obligations. The move to buy back these VLCCs is a significant capital allocation decision that signals management's confidence in the long-term prospects of their business. Alright, that is our breakdown of International Seaways Incorporated's latest filing. What do you think about their decision to take on debt to buy more ships? Let me know in the comments below. If you found this breakdown useful, please hit that like button and subscribe for more corporate deep dives. And don't forget to join our Discord community, linked in the description for even more discussion and insights. Thanks for watching, and I'll see you in the next one.